Hello, today is March the 8th, 2025. As always, we'll do our disclaimer, we'll go over our calls, make our predictions, and the weekend's always a time when we like to look at the longer term picture. This is not true. This is my trading plan for Monday. Monday is March the 10th, 2025. Remember, this is a plan. I can change my plan. My plan can be completely wrong, and any trade you make should be made at your own risk. Well, Friday was a day when a big economic report came out. We made some calls, but I don't like to put a lot of confidence in my calls on those days, but they did play out. We looked for the pattern with the early high. We got that. We had various plans depending on what happened. We said if we gapped up and took out this high, we should have a huge rally. That didn't happen. We said if we gapped under this low, could be a huge drop. That didn't happen. And we said if we undercut this low without gapping under it, it shouldn't stick. It should reverse. And that's what happened. So those things all played out. This is a reminder of what we said. We did get a gap opening. We did get a prompt move, but we didn't keep the gap. So gap opening and holding the gap isn't the same thing. These are the patterns we have for next week. Monday should have an early high. It's a day which usually goes straight up or straight down, but this day in the cycle does not, so look for an irregular pattern. Well, during the day we got a sell signal in the morning. We certainly got enough to satisfy that. Despite this big collapse, MEJT said it was a false move, wouldn't stick and would retrace, and that worked. In the afternoon we got an ultimate buy signal and an ultimate sell signal. The ultimate buy signal is already played out. There's a regular sell. This is a false move, and the target's the same, 57.29.61, undercutting this. The most likely time is Monday. Ultimate targets don't have to go lower than that, but they almost always will. So unless we gap up smartly, we have a much lower target for Monday, 57.29.61. The lower target doesn't assure we're going to close lower, but unless we gap up smartly, that's my call. And gapping up smartly can't be ruled out, because after hitting a new low, the close was over all these lows. So if that's maintained, it's underlined, if that's maintained, that's a rejection of a break to a new low. But it doesn't have to be maintained. We could still hit the target. Ultimate targets are very unlikely to stay unfilled. Again, the last one that didn't print before this year was in 2020, and before that was 2016. So the odds are we're going to see that price, even though it doesn't work every single time. Ultimately means eventually. It doesn't have to be on Monday. We said it was going to be very hard to break under this. We have a straight line down to a straight up moving 200K moving average. We said without gapping under it, it just wasn't going to stick, and we traded under it without the gap, and that didn't stick. It's still going to be very tough to break through that. Nothing's impossible. I mean, if we gap down under this, then bombs away on the downside. But for right now, there's support here. But some other support's breaking. Any break needs confirmation. So if we go straight up from here, we ignore it. But if this doesn't hold, then something else is going on. It's always possible to come up with some count that works. I can still have an ABC that works. All these fib works, all these things work, but we've had counts that work all the way down, then we keep dropping. So let's look at some other things. I'm not happy about breaking this trend line. Now a small break which promptly reverses, that doesn't disturb me. Small breaks don't bother me because they need confirmation, and so far we don't have it. But I'd be a lot happier if that didn't break in the first place. Well, usually these things are going to stop in the fourth wave of prior degree, and that's here. And that's a break. And that bothers me a lot more. Now again, a small break which doesn't stick, I just ignore it. But when that breaks, you have to allow for the possibility that support's going to fail. I mean, we have this trend line which didn't hold. We had Bollinger Bands which held on a closing basis, but they didn't hold. So what if support fails here? Now again, support doesn't have to fail. We hold this and go straight up, fine. What if it fails? Well, there are certain places to look for declines to stop. And one place is a Fibonacci retrace of the last move up. And another is a Fibonacci target of the prior consolidation. So this is the last move up, if you fudge a bit and say the last move up ended here, we'd hit right at the 50%. But I'm not going to fudge. If this is the last move up, we have a target 56, 46, 77. If we don't hit it, there's no hard and fast rule. But the next targets on the downside would be 55, 39, 81 and 53, 87, 53. So if this fails, we have lower targets. Now the commonest one is 55, 39, 81. And if you see, if we measure to 55, 39, 81, that drop would also be a Fibonacci target of the prior consolidation. So everything balances out there. But if that doesn't hold, the next lower target is 53, 87, 53. And that 50% of this, that balances out too. So if this holds, fine. I've still a small break of support without confirmation. That doesn't bother me. But I'm very concerned about this break of the fourth wave of prior degree. And if we break, either one of these numbers work. Now 55, 39, 81 is a lot further down. And look at 53, 87, 53. If we hit that number, we cross another MEJT target off the list. 4 targets failing in a year has happened before, but it's pretty unusual. 3 targets failing in a year is not unusual. And that's out of 650 targets in a typical year. So we could be in the 5300s if we fail here. There's no law says this has to print. Some of these, it isn't like 100%. But at least it gives some credibility to a much bigger drop if, in capital letters, if this doesn't hold. A break without confirmation that gets promptly reversed, particularly on a Friday when it's hard to reverse trends, and particularly when you overtake all these prior lows, that could have been it. That could easily have been it on the downside. And if we open up here and keep racing away, that's fine by me. But I don't like that break of the fourth wave of prior degree, and when I see it, I'll believe it. Right now, I have a lower target, and if we don't gap up, that's my call. But again, if we gap up, then forget this. I accept a failed target at a major change in trend, but ultimate targets usually print at some time. Now again, if we take this out and don't take this out, nothing changes. But if this doesn't hold, that's a different story. So, Monday's pattern has a really high regardless of where we open. Typically, it's a rally day with a final hour high, and failure is a straight line drop. The pattern often is irregular rather than straight up or straight down. There's a lower target. Unless we gap up smartly, the rules call for it to print. It's not easy to break a strong decline on Friday afternoon. Retail customers are unlikely to fight a strong trend before weekend illiquidity begins, and as long as Friday's low holds. We could have seen a high volume selling climax this week, with promptly reversed trendline breaks, Bollinger Band support undercut, and a minor violation of the fourth wave of lesser degree. Woodson's change in trend date of March 6 allows for some leeway. Don't forget, sentiment indicators are at levels seen only at major lows. They just don't pinpoint the low exactly. Undercutting Friday's low, on the other hand, would confirm those breaks, would create reasonable downside targets near 55.40 or even 53.87 cash. So we have a lower target. If we don't gap up smartly, the odds are for it to print. That's a big number for me. We get confirmation of this break. To my surprise, I must confess, if this breaks, I think we're going much lower. I'm not convinced that's going to break, but I don't like to guess on these things. We'll have to see if it holds or not. It's a pattern with the early high, often bullish. Negative is a straight line down, but doesn't always play according to the straight up or straight line rules. And that's today's call.